Hey traders, welcome to this video. In this one, I'm just going to run you through Australian dollar against the US dollar, how to manage it, how to trade it, what I'm looking for, and everything in between. So at this current point, the monthly candle, you can see, obviously it started yesterday because it's the 2nd of May today. It's not pushing very far. And the two before it as well, you can see they're very weak candles. Now, if I zoom out even more, what's interesting now at this point is that if you go back, let's say 20 years to March 2003, the recent level you've just hit actually coincides with that 20 years later, okay, or almost 20 years, October 2022. So the price clearly at this point is low, and that has clearly been a reactive area. You saw that here, okay, you saw that there, and you saw that over here. All right. So planning ahead is really important with this. And I can actually swap now to my weekly chart and we can discuss even further. So, like I said, the last few months have been really sideways. And that's what it looks like. When you don't have a real direction for an asset and it's not going overweight, that is what it looks like. Okay. So your job becomes basically two things. Where are we going to go after we get out of this sideways movement? And if we get there, how are we going to trade? And how are we going to trade in the meantime? Okay. So if I just get rid of all that and go once more down to the daily, you can see that you've already had a shorting opportunity, like we spoke about on my stream this morning, right here, because you've got that candle wick forming. That means price has come up and then it's been rejected. In other words, there's too much selling power at this point, just like you saw all the way along. Okay. It's really significant, this, because again, there's no coincidence. This just happens because people basically buyers get out and sellers come in. Okay, they've got that push up and they're out. Now, there still remains a part of this upside channel. Okay, up to there where that red line is and down to there. Now, because you missed that short already, you'll need to drop further. The fall at the moment is very, very early on support. So that's why you're seeing a minor candle. I wouldn't be surprised if you do push up slightly higher, okay? And somewhere around there, you end up short, 67,350, okay? And it just more or less coincides with the newfound downtrend. But, I mean, all you're really looking for is to get in line with all of this, okay? Because you've just seen all of this happen. So you know that's a reactive area. So that is my short zone, but I would only take it light because your retracement, if you go back to your daily, is not far, okay? If you look at this move down to here, right, from there, and then you're only there, and now you're just up here already. It's not far. You want to have a normal size short up there, okay? Much higher up. So my bias really, okay, you can sort of see, if I swap to the 4-hour again, you can see that this sideways, this is slightly up, okay, slightly up. You could more or less fit it. You could blanket it, throw a blanket over it. Really, it's like this. It's so tight. I mean, it's not exact, that channel, but you can see that you're really, really not going quickly to the upside, and then you fall down here. So this just looks weak to me anyway. If I swap to the weekly, you can see that none of these candles are pushing up high, and therefore I wouldn't be surprised if we get lower. Okay, and I would like it long near a 63.7, I would say, around there. I'm looking mostly at this candle wick all the way back there. And to coincide with this, don't forget that when you last came to this point, you flew away, okay, up to there. And then the same up there, all right? So we're seeing the same thing again, okay? And if this was to form somewhat in a slight uptrend over time with weak sentiment, it might look something like that anyway. Okay, again, the bottom of the channel would coincide with the level I just spoke about. Now, if I wanted to take it short more convincingly because of previous PA, etc., I might do so around 68.75 or the middle of this price channel. Okay, and these MAs here likely to curl in as well, which would be great. So anything around this area, you could have a front runner, perhaps 68.8, and then the rest of your position 69.8. Okay, so short side bias comes up here, long side bias down there. In the meantime, if you want to short it inside this really, really sideways channel like we looked at, okay, I can actually get rid of all of that. You know, if you wanted to short it somewhere around here, that's all right as well in my book. Okay, because you're just getting that early rejection. But if we get any higher up to more reasonable resistance, okay, which you can see around there and there, okay, then I don't mind shorting it there, okay. But anything else, it's going to be long. If you are going to trade it long, I do it lightly because you're within this longer term downtrend, okay. So you've inherently got more risk because you're buying in a downtrend, okay. And there's no major price action. All you're really going off, if you're going to get long here, would be an even more reduced stochastic oscillator, even lower. And it would be the fact that you have minor PA there. But it would also be the fact that when you last came to this point, you exploded up and you exploded up there. So clearly that is a price where buyers or the smart money like to be. Okay. And sometimes if you put the time frames up even more, you can actually see that again. Okay, as an area where the price really, really moves away. So it's important to understand that part of trading, that you can see historic prices where prices really push away. As always, if you want to get started myself, go under this video, click the link. And if you've got any questions, shove them in the comments. Thanks for coming, guys. See you in the next one.